From Bloomberg World Headquarters in New York to our TV and radio audiences worldwide, I'm David Weston. Welcome now to Balance of Power, where the world of politics meets the world of business. On the brief today, David Merritt from London on a divided NATO alliance, Laura Davison on Capitol Hill on potential tariffs on French goods, and also from Capitol Hill, Kevin Cirilli on what comes next on impeachment. So, David Merritt, let's go to you first. We saw President Trump and President Macron there. It seems like for an alliance, they're not very much together at the moment.
That's right. Really quite a sour meeting between the two presidents today. And somehow President Macron seems to have maneuvered President Trump into actually defending NATO. Of course, we're quite used to hearing Mr. Trump attacking the NATO alliance and criticising other members for not paying enough. Well, Mr. Macron's comments about the alliance being, in his words, brain dead, that prompted Mr. Trump to say, well, that's actually a very nasty thing to say and really disrespectful to the rest of the alliance. And you saw, and you can see there now, the body language really quite lacking in warmth, I think you could say. However, having said that, at the end, Mr. Trump did say, look, we often now disagree. This seems to be the way that this relationship has gone, but we do get there in the end. In the background, of course, is this question about taxation that France has threatened on the American internet giants and reciprocal tariffs. So, you know, as always with this now, we're getting used to this as well, this question of trade being used by both sides to try to lever the alliance to get their results that they want.
Well, exactly. And is there a chance now that trade may be used in yet another way? Because although President Trump, as you said, is actually now defending NATO, a change of position for him, at the same time, he's still concerned about the level of contributions from the members, getting it up there. And as I understand, he's suggesting maybe we might even use trade or tariffs to try to really get the various members to contribute, particularly Germany.
Yeah, that's right. And many of the countries in the alliance have actually responded to the threats that Mr. Trump's been making for a couple of years now on this question of spending and have upped their budgets. And he praised them today. He said that he's come round to NATO a bit more because it seemed to be flexible. Germany is still in his sights, though, and he said today very explicitly, if they don't toe the line and agree to increase the spending, he's going to look at more tariffs potentially to try to punish them. Of course, things like tariffs on auto makers, very important to the German economy, which is really just skirted with recession. That's going to be a very powerful tool to get the Germans to try and budge on this question of spending.
Yeah, and one more source of possible tariffs. Thanks so much to Bloomberg's David Merritt reporting from London. Now let's go to Laura Davison in Washington up on Capitol Hill. So, Laura, let's pick up on what David was talking about with this digital tax, so-called digital tax with France. What is this about? Because now we're threatening, as I understand it, 100% tariffs on $2.4 billion worth of imports from France.
Yeah, so earlier this year, France basically said, look, we're going to tax big tech companies, so that's Google, Amazon, Facebook, because we think that these companies aren't paying enough tax here, that they're using our customers, that are French residents, so we're going to put this tax on. And you've seen several other countries follow, you know, Italy, Austria, Turkey, for example. And so the U.S. said, look, this isn't fair, and we're going to look into putting tariffs on you. They did this report that came out late last night, and they found that, yes, this tax that France had put on was discriminatory, and they said, look, we're going to tax sparkling wine, makeup, cheese, a lot of like quintessentially French products. So this is was expected, but you really sort of see, unlike some of the other tariffs we've seen, that the business community is behind this. So you have tech companies saying, look, that we think that this is a good movement by President Trump and his administration.
Yeah, it's good that because France is trying to do it all on their own. At the same time, a lot of people agree there's a global issue here, particularly in the tech companies, because they can situate their intellectual property in the lowest tax areas and actually sort of get around taxation. OECD is trying to address this. What are the prospects of a global solution? And isn't the United States sort of in favor of that?
Yes, so the U.S. is pushing strong for a global solution. You've got, more than 130 countries sitting down trying to work this out. They've gotten reasonably far for getting these many cooks in the kitchen to come up with something. There is a lot of optimism that they will be able to come up with a plan by next year. So it's still relatively slow moving. And France has said, look, in the meantime, we're going to continue to tax your companies. If there is a global solution, then we will refund that money. But of course, that doesn't make companies here and now happy when they're having to write that tax, pay that tax with the hope of maybe getting a refund in the future.
Okay, Laura, thank you so much for the reporting today from Capitol Hill. That's Laura Davison. Now let's stay up on Capitol Hill and go to Kevin Cirilli because it's all about impeachment. We thought we were going to get that report out of the Democrats, and in fact, we've got the Republican report before we get the Democrat one.
Precisely that 110-page Republican assessment of the impeachment inquiry thus far. Republicans sticking by the president, who, upon landing in London for the NATO summit, David, saying that he is satisfied with how Republicans are continuing to stick by him as it relates to impeachment. Let's play out the next 24 hours. In the past day or so, members of the House Intelligence Committee have been gathering in a secure facility to review the report that has been compiled as is right now. From tonight, 6 p.m. New York time, members of that committee set to approve that report, largely expected to be a party line vote, and then it goes to the House Judiciary Committee, chaired, of course, by the Democrat from New York, Jerry Nadler. That hearing set to begin tomorrow. The president, of course, has declined the invitation to attend that hearing, as he has also declined the opportunity for his attorneys to participate in that hearing, saying that as of now, this equates to little more than a quote-unquote witch hunt. Beyond that, the president not at risk right now for losing any Republican support, but Democrats keeping the pressure on and moving ahead with an impeachment inquiry likely to be wrapped up by the end of this calendar year or early next year.
And Kevin, we'll be joining you tomorrow to watch that impeachment hearing. In the meantime, in a slightly different part of the forest, we also have Attorney General Barr apparently sticking with the president. Reports are he doesn't like much the Inspector General report that came out that I guess said it was okay to start the investigation into possible Russian meddling in the election.
Yes, Attorney General William Barr continuing to stand by the president. The Washington Post reporting earlier today that he is at odds now with the Inspector General. It's the latest twist and turn in the impeachment saga.
Okay, many thanks to Bloomberg Chief Washington correspondent Kevin Cirilli reporting from Capitol Hill. And now it's that time when we get a check on how the markets are reacting to today's news. We're joining now by Abigail Doolittle. So I think I kind of know what you're going to say. There's a lot of red here. I think we kind of know why.
Yes, a lot of red. Trade, trade, trade. You know, the worst case scenario that we've been talking about over the last few weeks. It now seems as though it's a more realistic possibility. I'm talking about the idea that the U.S. could impose tariffs of 25% on Chinese goods starting December 15th. Consumer goods right before the all-important Christmas holiday and the Jewish holiday, and that could really create an issue for the numbers, the economic numbers that we're looking for. And the chips down even more than the other indexes, a real barometer for what's going on trade-wise, telling you that investors are pretty concerned.
And over on the bond side, you also see movement on the bond market. At the same time, you and I were talking, it's down almost 1%, but it's not as far down as it was a short time ago. And it's still noon. We've got a ways to go before the close.
We do, and that close is going to be really important. It sort of feels as though the buyers are trying to step in and support stocks. On the other hand, if you take a look at the chip index, it looks like it may have a little more work to the downside. That close will be very important. If we close right where we are now, sort of neutral, but if you see some big selling into the close, that could be a real negative. Or on the other hand, maybe these losses are really ameliorated to some extent and the buyers step in.
And what's going on with luxury stocks? Anything special?
Yeah, well, as Laura Davidson was talking about, that proposed $2.4 billion in tariffs of up to 100% on some of these French goods. Really pretty extraordinary. It's interesting that she was talking about the idea that these big tech companies that have had this 3% tariff on some of their services, that they are happy for this, but it is certainly hurting some of the stocks today, including LVMH, along with L'Oreal, and of course, LVMH in the process of taking over Tiffany. It'll be interesting to see whether or not that it puts a wrinkle in that takeover.
Yeah,
Stay tuned.
They need their stock to stay up.
Yes,
for that acquisition.
yes, and revenue.
Okay, many thanks to Abigail Doolittle. And now we're going to turn to Mark Crumpton. He's here with Bloomberg First Word News.
David, President Trump has another round in his legal fight with Congress over financial records. A three-judge panel of a federal appeals court ordered Deutsche Bank and Capital One to turn over the records to lawmakers. The president can ask the full appeals court to consider, or rather reconsider, the decision, and if that doesn't work, he can go to the Supreme Court. Meantime, the president says he wants to work out a, quote, mutually beneficial tax if the U.S. can't resolve a digital tax dispute with France. Mr. Trump made the remarks during a meeting in London with French President Emmanuel Macron. The U.S. may slap tariffs on nearly $2.5 billion worth of French wine, cheese, and other products. The move would retaliate against French levies on American tech companies, including Google, Apple, and Amazon. France says the U.S. will retaliate if tariffs are imposed. A top European human rights official today demanded the immediate closure of a makeshift tent camp in northwestern Bosnia. The commissioner for the Council of Europe said, quote, "This is not a place for human beings." International aid organizations have repeatedly warned the camp is unfit because it lacks virtually any facilities and is located on a former landfill close to a minefield. A winter storm that made travel miserable across much of the United States finally hit the East Coast. By the time it's over, it may drop from 10 inches to 2 feet of snow on an area ranging from Pennsylvania to Maine. Heavy snow is also expected as far south as North Carolina and Tennessee. New York State has called out 300 members of the National Guard to help with snow removal. Almost 800 flights were canceled yesterday and more than 5,600 were delayed. Global news 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg. David?
Thanks so much, Mark. Fighting a trade war on multiple fronts. How President Trump has managed to win where it matters most. That's the home front up on Capitol Hill. We talk with the Hoover Institution's Lanhee Chen. That's next. This is Balance of Power on Bloomberg Television and on radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. U.S. stocks are slumping today, with all major indices off by 1% or more as President Trump continues to expand his trade war, going after France, Argentina, and Brazil, and saying he's in no big rush on doing any deal with China. We welcome now Lanhee Chen, former policy director of Mitt Romney's 2012 presidential campaign and currently fellow at the Hoover Institution. Lanhee, always great to have you with us. So start here. I mean, you've advised Republicans, particularly now Senator Romney. What happened to free trade and the Republicans? Because I don't see any Republicans up on Capitol Hill standing up and saying, wait a second, Mr. President, we're for free trade.
Yeah, you know, I think there are a few. Rob Portman and certainly the aforementioned Senator Romney do stand out. But fundamentally, the Republican Party has undergone a shift when it comes to these trade issues. And I think you saw this beginning back in 2008. The beginning signs of maybe the free trade position not being as popular as it once was. In 12, I think that shift continued. Now I think the question really is, how has trade affected American workers? And I think that's the next front of this battle. But the ancillary part of this, unfortunately, is that the public opinion in favor of open and free markets has really slid quite a bit over the last several years, and it's resulted in Republicans backing away from what I think is the right economic policy position.
Well, you raise a really proper question, how has trade affected American workers? But the trade war is not doing a lot of favors for American workers either.
Yeah, I mean, I think it's the single biggest drag on the economy right now. The fact that we have this uncertainty with China, now we've introduced uncertainty with respect to France and some of our other trading partners. The fact that we can't get USMCA across the finish line, which is not entirely the president's fault, but clearly there's a challenge there. So I think all of these things together present some significant challenges for the economy at a time when things are otherwise going very well.
So what are the prospects with China? I know you just got back from China, and so you have a report from the front, as it were. What's the perception over in China right now of these negotiations, such as they are with the United States?
I think there's a few things to note. First of all, the Chinese, particularly those who are involved in policymaking, are very keen observers of our political process. They understand exactly the kinds of pressures electorally that members of Congress and, frankly, President Trump are under. So they're under no illusion that President Trump doesn't want a deal. I mean, clearly they believe the president wants a deal. He wants that deal also to come in time to be marketed for the election. So that's the first thing. The second thing I would say is the Chinese also very much want a deal. The Chinese economy is much slower than it's been in the past. You see this. The result of that is you talk to storekeepers, you talk to ordinary citizens on the street. They recognize the Chinese economy is slower. So they also want a deal. But I think there's also this nationalist sentiment that's begun to arise in China, a sense that the Hong Kong protests really have animated this, by the way. There's really a sense that the protesters in Hong Kong have gone a step too far. And that is a view, by the way, that prevails sales amongst Chinese nationals, as well as a number of expatriates who live in China now. So the perspective, interestingly enough, is turning much more nationalist precisely at the time when I think President Xi needs it, given where he is in this negotiation with President Trump.
We're talking with Lanhee Chen of the Hoover Institution. How badly does President Trump politically need a deal? Because as we look at a lot of the polls, it feels like there are two economies in the United States right now. There's the Republican economy and the Democrat economy. And the Republicans see it in one way, and the Democrats see it in another way, and it doesn't seem like they're likely to change.
Yeah, I think the economy objectively is doing well, particularly if you compare it to what's happening around the world. That having been said, you're absolutely right. Democrats view this economy one way, they view President Trump one way. Those opinions are not going to get changed. Where I think the president needs the deal is in how he talks about how he deals with China. You know, he said yesterday, well, maybe we don't need a deal till after the election. I tend to think that's bluster. The reality is that the president would much benefit from having this deal because this was a signature campaign issue for him in 2016. If he's able to say, look, no other American president was able to get a deal done with China in this way, and I was, even if the dimensions of that deal aren't particularly robust, that is something for him to market. It is something for him to use in this election. I think that will be valuable for him as he thinks about what the pitch is for re-election.
Lanhee Chen of the Hoover Institution, you advised at a senior level Mitt Romney when he was running for president. As you look at the elections next year in 2020, how will impeachment figure in at all, do you think?
You know, the crazy part of all, we spent a lot of time thinking about this now. I think by the time we get to next May or June, it's going to seem like a distant memory. That's the reality. I think that impeachment is an example of the partisan polarization we face. Democrats are not changing their minds. Republicans are not changing their minds. Independents don't really know what to think about it. In fact, if you look at these swing states, a lot of the polling suggests that impeachment is not a net positive for the Democrats. So I tend to think that this will be a very noisy next few months. But once we get past this, the lasting impact of impeachment, I think, is pretty minimal.
So Democrats may not be changing their mind about what they think about impeachment, but some Democrats within the party are changing their mind about who they're backing as a presidential candidate. We've now seen Elizabeth Warren trail off some, and there are reports that might well because of her Medicare for All policy, something we've talked about before. You raised some questions how much sense that really made. Can she back off of this?
Well, she's trying. She's saying now we're going to transition to that plan. But she, you know, this is part of her brand. She is the progressive ideas person. And if she's going to propose something like Medicare for All, she's going to have to stick to it, not the least of which is because she's actually come out with this plan that says how she's going to pay for it. Now, I think that's fantasy, but the reality is this is where she is. This is her brand. This is part of why she's been able to rise to where she's gotten to. And part of the reason why she's now taking the fall is people are realizing, well, maybe her plans don't make a lot of sense. Maybe she is a liability in the general election. Maybe she's not as appealing of a candidate as we thought. And I think a lot of those progressives are going home to Bernie Sanders, quite frankly, because they sort of see him as the originator of all this anyway. So I think she's really suffering right now.
And he's not backing off. Bernie Sanders, Senator Sanders, is not backing off one bit. But how does it divide up between Pete Buttigieg on one hand, the mayor, and also former Vice President Biden? Because it seems like they're almost fighting over exactly the same territory when it comes to health care.
Yeah, when it comes to health care, they are. But they're such different candidates. I mean, they're making different generational pitches. In some ways, you've never really seen the Democratic Party, in my mind at least recently, go for the candidate of restoration. They want the candidate that looks forward. And I think in that way, Pete Buttigieg is a better fit for what we might expect the Democratic Party to want. Of course, in the Trump era, one never can tell. But it really is an interesting generational battle for, I think you're right, roughly the same voters who believe that Elizabeth Warren and Bernie Sanders go too far. The flip side of that is, when are Bernie Sanders and Elizabeth Warren going to engage each other? They've been very simpatico so far. Are they ever going to engage each other? Because they're really competing for the same voters.
But Lanhee, you raise a fascinating point. Insofar as this is a generational change election, and we don't know if it is or not, but if it is, sort of like 1960 was in some respects, there's only one in the top four who can claim that. Because Elizabeth Warren and Bernie Sanders and
septuagenarians.
Exactly right.
Yeah.
And Joe Biden are all elderly, like my age.
Well, and look, I think even if they were of a certain age, if they had a certain energy level like Elizabeth Warren, I think the age argument can be buffered a little bit. Joe Biden's problem is that he looks every bit his age, I think, when he's out there. And I think that becomes a problem, becomes a challenge over an extended campaign. That really comes forward.
Okay, Lanhee Chen, always great to have you here. That's Lanhee Chen of the Hoover Institution. Still ahead here, Cleveland Cliffs is getting into the steel-making business, buying AK Steel, the day after new tariffs were announced on imports from South America. Now, this is Balance of Power, and we are on Bloomberg Television and Radio. This is Balance of Power on Bloomberg Television and on radio. I'm David Weston. It is time now for the stock of the hour. Ohio-based steelmaker AK Steel is jumping more than 4% today after iron ore miner Cleveland-Cliffs agreed to buy the company for about $1.1 billion. Kaylee Lines is here with more. Every day is a new steel story. It's tariffs, it's mergers. What's going on?
I know there's a lot of news. Of course, today it's some nice vertical integration for you. So, of course, Cleveland-Cliffs is the biggest iron ore producer, and AK Steel actually is one of their top customers. Actually, it's number 2 customer, makes up about 23% of its revenue. And so now Cleveland is basically just fully going into that steel making business. Kind of interesting when you look at 23% of your revenue, you wonder how this makes sense. How do they make that up? Perhaps through cost cutting, et cetera. And you are seeing Cleveland-Cliffs actually pretty much fall off a cliff today. The stock is down by double digits while AK Steel gets this nice pop. The $1.1 billion deal represents about a 16% premium to where AK Steel closed yesterday. And analysts are noting that does look a little bit expensive. BMO Capital Markets says it's about 8.5 times 2020 EBITDA, which is a higher valuation than some of its peers enjoy. So there's definitely some skepticism, although you are seeing bonds really rally off the back of this. Some hope that the fact that Cleveland-Cliffs is buying this company means bondholders will indeed get paid back.
We just have to ask the question about timing. I mean, is it just a coincidence happens just after President Trump says he's going to impose tariffs? He said in the past he's really going to help the steel industry. Is this sort of a bet on, yep, President Trump will come through for steel?
Well, we know that when he first said this back in early 2018, it wasn't necessarily true. Steel prices did initially pop, then they lost their steam by about a third. You've had AK Steel is now less than half of what it was worth before the president said that. So yes, timing obviously a little bit coincidence. The fact that President Trump has said he will reimpose tariffs on Brazilian steel, for example, could give a lift to steel prices. But I think when you look at it broadly, this is a bet by Cleveland-Cliffs that the rebound we've seen in steel prices recently, the recent pickup, it's kind of making a U shape. Maybe that's going to continue, and that's really what they're trying to get in on here.
So you mentioned Cleveland-Cliffs stock is down. It's not the only stock down today. There are a lot of stocks down last time I checked. What's going on?
I mean, it's just really ugly out there. You now have the 3 major averages lower by about 1%. You're seeing a third day of decline for equities, actually. And this would be the worst 3-day performance for the S&P 500 since back in the beginning of October. And I think this is really a market that is having to re-rate its understanding of what this trade narrative is going to look like. With the president saying, I'm fine with not getting a deal until after the 2020 election, that prolongs not only the uncertainty about all of this, but you think about the economic impact trade is having in business investment, for example. All of that relates to that uncertainty. And you're saying that could last for another year. I mean, that's not good for risk appetite.
I must say, and you're seeing on the bond side as well. I mean, you saw the jump in the 10-year yield. But I'm really struck by, are people listening to what we're saying or what President Trump is saying all the time? How could you price in anything close to a certainty of a deal with China, given what's been said and how it's gone up and down and all around? And yet it looks like the market was pricing it in.
Well, I mean, the narrative's changed every day. I remember just a few weeks ago, they said we were 90% of the way there, which clearly has no longer been the case. I mean, the narrative does change every day, but I think it's also in terms of maybe the economic growth picture is looking a little bit better. Maybe the market got ahead of itself into what the recovery was going to look like for PMIs, for example. And of course, trade as a weight on economic growth could change that going forward as well. So maybe the market just kind of ran up too quickly in how optimistic it was on all of these narratives.
It certainly raises some questions about the election year as a practical matter.
Absolutely.
It might make it difficult. Okay, many thanks now to Bloomberg's Kaylee Lines. Up next, as nations gather in Madrid to talk climate, we talk with Stephanie Kelly. She's senior global economist with Aberdeen Standard Investment. And we're going to talk with her about her new report on investment risks and opportunities when it comes to climate change. This is Balance of Power on Bloomberg Television and on radio. From New York, this is Balance of Power on Bloomberg Television and on radio. I'm David Weston. Jay Johnson served as the Secretary of Homeland Security under President Obama after a tour of duty as General Counsel for the Department of Defense, where he was the principal legal architect of the Obama administration's efforts to combat terrorism. Secretary Johnson is now at Paul Weiss here in New York, and we're pleased to have him back with us on Balance of Power for today's Conversation in Chief. Welcome back, Jay. It's good to have you with us.
David, thanks for having me on.
Okay, so give us a little bit of a summary of where we are in terms of our national security, our homeland security, as it were. And let's start with Mexico, because we've talked a lot about the border down there. But there's another development now with these drug cartels.
Yes.
And the murders that have happened to the American families that had transplanted down there.
Yes.
What's going on with the drug cartels?
Well, unfortunately and tragically, the murder of the U.S. citizens is a reflection of a larger wave of violence caused by these cartels that's been going on for some time now. And it's correct to characterize it as a security issue for Mexico and the United States. Mexico is stretched when it comes to its own security. They've committed a lot to helping the Trump administration with border security on our southern border. But the cartels present a much, much larger threat, and they are probably the largest economic power in that country. And so addressing the cartels, and I know we've tried to do this before, requires a sustained effort on behalf of both the Mexican and the United States governments.
So this is not unique to AMLO, to Lopez Obrador, the president down there now. This long predated him. Other presidents have tried to take on the drug cartels. It's been very, very difficult. But have we, to any extent, made the situation worse by putting so much pressure on the Mexican government, on our southern border, and for that matter, on their southern border, to keep people from coming across from Central America?
David, it is definitely the case that by prevailing upon the Mexican government to step up the security on their southern border with Central America, they have committed resources, their National Guard, to our border security and diverted that away from their traditional law enforcement counter-narcotics efforts. That is definitely true. It would surprise a lot of people to know that Mexico has almost no border patrol as we know it. You know, the border patrol agents on our southern border. Mexico has almost none of that. In 2014, the Obama administration prevailed upon the Mexicans to do more on their southern border with Central America, but they were really stretched to do that. They only have like several hundred people committed to that effort. And so to enhance it, they have to divert resources away from law enforcement.
We're talking with Jay Johnson, the former Secretary of the Department of Homeland Security. What could the United States do to help? I mean, there's talk now that we might declare the drug cartels a terrorist organization. What would that mean in practical effect? Did that allow us to do things, to actually go after them?
Well, there's a lot we can do. Mexico is very, very sensitive to a U.S. military presence in their country. There's a lot we can do cooperating in law enforcement, devoting our own resources, DEA, FBI, perhaps even at the state level. This idea of designating the cartels a foreign terrorist organization, my first question would be, to what end? Yeah. For what purpose? Is there an enhanced authority that the U.S. government would get by doing so? And the answer is probably no. There's a lot we can do in law enforcement. Supporting drug dealing is already a federal crime. There are many sanctions in place already for doing business with the cartels. So designating them a foreign terrorist organization sounds good. But you have to ask yourself, what additional authorities does that give the U.S. government? And I would say almost none, if any.
President Trump has clearly made this a high priority, that wall and having security across the southern border. And there's a lot of, I think, political support for that notion across the country, Democrats and Republicans, that we should have secure borders. Are we making progress? Are we better off today than the day he came to office in terms of our southern border? Interesting question.
So this year, we saw numbers of apprehensions, and apprehensions are how we measure total attempts across the border, of 100,000 a month. That's higher than anything I saw while we were in office in the Obama administration. The highest I saw was May 2014. That was 60,000 in 1 month. 100,000, over 100,000 is way worse. And there are people out there, objective observers, who say that one of the reasons it got so high is when the president ended family separation in a very public way. It actually had a boomerang effect that caused people to sort of run for the exits last summer. The ultimate answer, David, is addressing the underlying poverty and violence in the 3 Central American countries. The lesson learned for me, dealing with this problem for 3 years, is you can do a lot of things on our southern border to secure our border, to enhance enforcement, but you've got to address the problem at the source. And as long as the poverty and violence exist in those 3 countries, we're going to continue to be dealing with this problem over and over again.
We're talking with Jay Johnson, former Secretary of the Department of Homeland Security. As you look at the situation right now, what is the leadership situation for the department that you used to run? There have been there's a lot of turnover, I think it's fair to say. Do we have a permanent secretary, a replacement for you?
No, we have another acting secretary, Chad Wolf. He is President Trump's 5th Secretary of Homeland Security. And there's turnover not just at the secretary level, but at almost every other senior level position in the department, and that's not good. That's not good for the cabinet level department devoted to protecting the homeland and the American people on the 1 yard line. You know, our military, our intelligence community protects the American people on the 40, the 50. Homeland Security protects us at the end zone on the 1 yard line. And to have this kind of leadership churn is not good. It's not healthy for the organization or for Homeland Security.
Once again, we're speaking with Jay Johnson, the former Secretary of the Department of Homeland Security. Give us a broader sense, though, beyond the southern border with Mexico. As you look at the possible threats to U.S. national security, what's at the top of your list?
Climate change. Climate change at the top of my list, absolutely. My top 3 threats to our security are climate change, climate change, climate change. Now, beyond that, of course, the opioid crisis.
Explain why that is. What is the specific threat to our security from climate change? How does that work?
Severe weather impacts on aging infrastructure, in particular, present, in my judgment, a security threat. Not just a threat to our environment, but a security threat. And so long as we fail to address aging infrastructure, and so long as we fail to address the larger problem of global warming and climate change, this presents a long-term security issue. President Obama used to say it was a slow motion emergency because we don't think about it day to day. But I look at that as our top #1 Homeland Security issue. Now, of course, we have to deal with mass violence, the threat of domestic terrorism, and a whole host of things I'm sure you're familiar with. But top of my list is global warming.
What's interesting to me is that this is a subject, and there are some others like this, that people who are in the know say is a really pressing big problem that we never hear about in the political sphere. We don't hear climate change tied to national security. We don't. Not only from President Trump or his administration, but from the people running on the Democratic side for president. No, I haven't heard anybody make that point.
Well, we need to. And it should not take a crisis for the American public to realize that we need a national consensus and a national effort at dealing with and leading on the world stage when it concerns global warming, climate change. But it is very definitely a security issue.
Jay, it's great to have you with us. That is Jay Johnson. He's the former Homeland Security Secretary, and he is also going to be staying with us coming up in the 1 o'clock hour on Bloomberg Radio. We're going to talk with him about election security in this country. This is Balance of Power. We're on Bloomberg Television and on radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. Representatives from 200 countries are gathering in Madrid for 2 weeks of talks on global warming. And Aberdeen Standard Investments is out with a new extensive report on how different nations are dealing with carbon and what it means for investors, for that matter. We welcome now one of the authors of that report. She's Stephanie Kelly, Senior Global Economist for Aberdeen, and she comes to us today from Edinburgh. So welcome, Stephanie. Great to have you with us. Explain your report. I've read through it. It's fascinating what it does. But explain what you did, what you were trying to do, and what your methodology was.
Yeah, of course. I mean, great to be here and such a great time to talk about this, I think, given what's going on in Madrid this week. You know, I guess the background to this research is basically, clearly investors have woken up to the importance of climate change and of addressing climate change and the role that private capital can play in trying to assist in the energy transition. However, it tends to be very company focused. Investors tend to focus on what are companies doing, what are their carbon emissions. But we think it's really important to bear in mind, companies don't operate in a vacuum here. Legislation, regulation, that's where climate policy is set, and that's set by politicians. So what we wanted to do with this research was really dig into the relationship between carbon emissions and the impact that can have, or the relationship that might have with elements of the economy, with policy, to try and better understand what are those relationships. But then crucially, and this is really what we were seeking to give to the investment community to kind of lead on this, is to provide a framework to incorporate climate policy risk and opportunity into the investment strategy approach. So essentially, if you've got a kind of a bottom-up strategy, this will be complementary, providing this top-down understanding of what is the climate policy risk and opportunity.
And you focused in particular on Europe, the United States, China, and India, which, as I recall, you said account for about 60% of all the carbon emissions in the world. How did you go about rating those three countries/areas?
So the way we do it is through a framework that can be applied to any country. As you say, we chose the biggest emitters because they seem the most relevant, but our intention is over time to roll this out to more and more countries and regions. So essentially the way we compare across is because we have 4 steps in the framework. Essentially you can think of these almost as a checklist, right? Questions investors should be asking themselves about climate policy environment. The first is about key characteristics in these countries. So what kind of climate, what kind of weather do they have? Do they rely on industry? Because we know industry is associated with carbon emissions. Do they have a lot of coal or oil? Those kind of things set what we call the base level for emissions. Then step 2 and 3 look at the politics and the policy. And here that's super important because the United States is a great example of the politics and the role that that plays in the failure to address climate change, because we know that, particularly the Republican Party, climate change just isn't an important issue for voters, therefore it's not an important issue for the party itself. And then the 4th step is to say, given what we know about politics, about policy, about the preconditions for carbon emissions, can we access this market? We're investors, first and foremost. Can we access this market? Can we contribute to the transition? And where are the opportunities? Which sectors are most exposed? And how do we go about making the most of those opportunities?
So we were talking with Aberdeen Standard Investments senior global economist, she's Stephanie Kelly. So Stephanie, I want to dig down a little bit on the U.S. side because it's not quite right to say Americans don't care about it. There's a wide range. There's almost like 2 different camps within the United States, where you have liberal Democrats who really think it's terribly important and conservative Republicans who really don't think it's important enough. Isn't part of the problem just division? It's not that the United States is all together and not caring about climate.
Oh, absolutely. It's definitely not the case that it's all United States voters. As you said, we know, and we dig into this in our report, that Democratic voters are very concerned, engaged on the issue, particularly the more liberal end of the Democratic Party. But so long as you have that deep division between Republicans and Democrats, as we see in the rest of the policy sphere, what you end up with is policy gridlock, right? We know the challenges you have between the House, the Senate, and the White House passing legislation and passing regulation. But what's interesting is then, because we know that, right? And that's a challenge. But where's the opportunity? Well, the opportunity from our perspective is if you look to the state level, and those states where there are more kind of Democrat-led tend to be more inclined towards incentivizing climate change, incentivizing renewable infrastructure projects, and creating an environment in which the energy transition can flourish. And we think that it's at the state level you can start to really find those opportunities.
Stephanie, you have an election coming up over there. You're in Edinburgh right now, but you have a UK election about to come up. Let's turn now to that election. And let me ask you specifically about climate, more generally about the economy. To what extent will that really factor into the results in the election, or is it really just all about Brexit at this point?
I think the UK election this time round is very focused on Brexit. It's obviously the key issue that is going to determine the UK economy for the next 10 years, 20 years, and voters are well aware of that. However, what we're seeing is kind of a delineation whereby the Conservative Party, which has been in government, is polling pretty well. The Labour Party, which is the kind of the traditionally left-wing party, has started to kind of pick up a little bit of momentum, but is still trailing a lot. And so for investors, what that means is, yes, we think that you were likely to get a Conservative government in December, but worth bearing in mind, for UK assets, the roller coaster may not be done, because 2020 brings with us new cliff edge moments for Brexit, and I think that's going to create real challenges for sterling in particular.
We have the potential roller coaster with Brexit with respect to the United Kingdom. What about the potential roller coaster with respect to Europe, and particularly France right at the moment, with President Trump now saying we're going to have tariffs, 100% tariffs on $2.4 billion worth of goods? How do you evaluate the risk of U.S.-EU trade friction?
I think it's clearly been there, kind of bubbling under the surface, and has its moments of volatility where it kind of pops up. And we've seen that not just, in the last couple of days, but actually in the last couple of years. We've had, particularly auto tariffs has been the focus. I think that the challenge you have is, because these tariffs are kind of aimed at trying to counteract the effects of the taxation on tech firms, US tech firms, it's kind of in some ways a little bit idiosyncratic. But I would say overall it's worth bearing in mind that the US and the EU are, fundamentally underlying all of the kind of momentary frictions allies. Where I tend to be more concerned and tend to be watching much more closely is around US-China relations, because we know there that strategic rivalry continues to be the undercurrent of these trade negotiations, which makes it harder to talk about a kind of a consistent relationship over time.
So, Stephanie, from your perspective over there in Europe, is what we're seeing right now with trade and the uncertainty over trade, is it really attributable to President Trump, or is he more of a symptom of a broader phenomenon where there's increasing really doubt about globalization the way it has been distributed across the population?
I think that that's a really important point, and one that we tend to underline a lot, which is there has been, with the kind of polarization and fragmentation of political systems across, I would say, Western democracies, in Europe, in the US, this kind of movement towards more domestic focus, trying to find new ways to compensate those people who feel that they've really not benefited from globalization. I think that that's an issue for all governments that they're trying to tackle, but unfortunately it's not clear what the policy solution is, and that's why you're seeing in Europe the increase in populism, and in the US kind of, you know, we often say President Trump's election reflects underlying concerns that already existed in the US around the Chinese economy and the extent to which that is embedded with the US economy.
Stephanie, thank you so very much for joining us today. Really appreciate it. That's Aberdeen Standard Investments senior global economist Stephanie Culley coming from Edinburgh. This is Balance of Power, and we're on Bloomberg Television and on radio. This is Balance of Power on Bloomberg Television and radio. I'm David Weston. President Trump caught just about everybody off guard yesterday with his sudden announcement of tariffs on steel and aluminum imports from Brazil and Argentina, and that apparently included Brazilian President Jair Bolsonaro, one of the most vocal supporters of President Trump on the international stage today. Joining us now from Sao Paulo is Bloomberg's Julia Lecce, who is our bureau chief down there. So, Julia, was President Bolsonaro surprised?
Yes, he was surprised, and I think everyone here was surprised as well as in the U.S. It seems to have come a little bit out of the blue. Bolsonaro reacted very quickly, but just said, we will talk to the U.S. I will talk to Trump if needed. But it doesn't seem like they knew it was coming. And the foreign minister at the end of the day also said, oh, we will work it out. We're trying to understand, and we will figure it out.
So President Bolsonaro has been quite outspoken in his support of President Trump in various ways, including, for example, how they deal with the situation up in Venezuela. What is it that Brazil really needs from the United States? How critical are steel exports?
So Bolsonaro has said time and time again he is an admirer of Trump and has sided with him. I think in the White House press conference they did earlier this year, you could see, I think he even endorsed Trump's 2020 candidacy at that point. He is more ideologically aligned, and his government is more ideologically aligned and shifting away from the leftist governments that we had that previously supported Cuba, Venezuela, and really going towards the U.S. and Israel. And he has really banked on that relationship to shift Brazil's foreign policy.
Brazil has a lot of issues to deal with, and President Bolsonaro has a lot of issues on his agenda. Does he need the United States to help address within the economy issues, or are they really internal to Brazil?
I think this is more of an ideological stance for him. We are big trading partners with the U.S., but we're also very big trading partners with China, which is at odds with the U.S. and has been for a while, right? We export a lot more to China than we export to the U.S. So economically speaking, it is a balancing act. But he is very much ideologically aligned with what Trump believes in, and that a lot of what he is asking for in the U.S. is this partnership in foreign policy.
So putting aside President Trump for the moment in the United States, what is the number one item on President Bolsonaro's agenda right now when it comes to the Brazilian economy?
I think the main thing for the government after they passed pension reform a couple of months ago is getting Brazil to grow. We got good numbers today. The third quarter GDP surprised to the upside, which was a good sign. The economy has been struggling for a really long time, and it is what we hear from foreign investors. This is what they want to come back to Brazil. We've passed the reform, the agenda is moving forward, and now we want to actually see growth.
Okay, Julia, thank you so much for joining us today. That's Bloomberg's Julia Lecce. She's our bureau chief down in Sao Paulo, Brazil. Coming up on Balance of Power, we're going to continue on Bloomberg Radio in our second hour. We're going to have more with former Homeland Security Secretary Jay Johnson. We're going to talk about election security with him. Also with us will be Jacob Kierkegaard of the Peterson Institute on the tense NATO meeting in London. That happened earlier today. This is Balance of Power on Bloomberg Television and on radio.